Money FM 89.3. Best of breakfast. The Bigger Picture, only on Money FM 89.3.
Good morning. Welcome to The Bigger Picture, and we are taking a look at where things are for Singapore's economy and the rest of the world, because we've got some PMI numbers out this morning from S&P Global, and that is painting a picture of improvement. So the latest PMI numbers at 52.8 in April, which is up from 52.7 in March, and this makes it 3 months in a row it's above 50, which signals expansion. And it's also the fastest pace, I believe, since last November. Interestingly, it is against the wider backdrop of the global economy going in the other direction, if you look at some of the PMI numbers. So let's check in now with Jingyi Pan. She is the Economics Associate Director for S&P Global Market Intelligence PMI team. Jingyi, good morning. How are you doing today?
Well, good morning, Ryan. Interesting times that we're at, indeed.
Yeah, so it's been back and forth with the tariff headlines, and right now we've got at least some data to digest, and it is encouraging because Singapore seems to be doing okay. How much should we be reading into this? 52.8 in April, up from 52.7 in March.
Yeah, thank you, Ryan. So you've painted the overall story for us, which is we have seen, of course, the number itself continuously improving since falling below 50 at the start of the year. I think what this itself represents, however, is that when we dig a little bit deeper into the comments coming through from Singaporean businesses, it's telling us that, in fact, the number itself is still pushed up a little bit by front-loading of goods orders. I do think as well that we have seen with the tariff announcement, the U.S. additional tariffs on April 2nd, it's also brought some of the surprise as well to, including, I think, here locally with the businesses. So some of these orders continue to come through from the front-loading perspective, and that's helped to actually push up our new business inflows for the businesses in the short term, as well as the headline number that you've just read to us at 52.8. But with that being said, I think it's also, with the story that we have seen globally, it's one where we are seeing that the business confidence has broadly actually eased among businesses. So the latest business optimism, or the future output index, as we call it in the PMI reading, that's sank to a 26-month low and barely showing optimism among businesses at present. Firms have continued to actually lower their employment levels. And at the same time, what's really reflective of this kind of concern is that while businesses are still seeing gradual increase in terms of their input costs, the things that they buy, they have actually on average lower costs, lower prices charged. So how much are they charging clients itself? That's actually fallen for the first time since January 2021, with a lot of discounts and promotions being offered in order to support sales. So I think it's painting to us this broad picture of more of this front-loading supporting the latest numbers that we have seen. And I think, over time, I think we're going to get a clearer picture. But for right now, I think at least at the start of the second quarter, number is still showing activity improving.
All right, so front-loading helping the latest numbers. But you pointed out that we perhaps might be at an inflection point of sorts, because if you look at costs, that seems to be going down, but also down with the optimism levels. What's going down as well is the global sentiment. If you just look at the global PMI numbers when it comes to manufacturing, we have it at 50.3 in March, going into 49.8 in April. So a bit of a drop there in the global picture. Is this a sign that things are going to be turning around, or at least turning downwards?
Yeah, Ryan, I think, as well, for right now, we do have the manufacturing PMI that has been released as well on a global scale, the JP Morgan PMI consolidated by us here at S&P Global. So that number has really actually shown the first, dip below 50, as you mentioned, for the first time so far this year. I think this itself is starting to reflect that coming through of the April 2nd announcement from what we're seeing from panelists themselves, up till the last month itself. A lot of this front loading have also actually continued to support things on the global scale, at least as of right now. I think the picture has actually turned a little bit. We're seeing global trade coming through quite a bit of pressure as well. And certainly on the confidence side, that's where some of this perspective have actually further lowered. And I think as far as what I recall, we do see some of the sentiment falling to levels not seen since some of the so coming close to the pandemic lows for that extent. So I think it's really painting a story of how the businesses, especially manufacturers who are directly impacted by this, they are expecting lower or at least more subdued conditions ahead, Ryan.
Yeah, I think you're also seeing that playing out in the earnings season with some of the companies pulling their annual guidance, right?
Yeah, certainly. I think, Ryan, we're just discussing as well, certainly with the respects to the likes of Ford. I think in their case, it's also a bit of a special one, certainly in terms of the auto sector. While we've yet to see the global sector PMI being released for April, but up till March, they were actually the worst performing sector on a global scale among the over 30 detailed sectors that we track. So it's really telling a story of how they are actually coming under pressure. Certainly, as well as some of the financials, which was doing really well, I think, up till start of this year. Even in March itself, we have seen that given the kind of situation, uncertainty that they have to grapple, and that's hurting business confidence and the ability to actually put in more of this investment. So that's painting a bit of a story. But I think with that being said as well, people are starting to have some of this positivity, at least, things might come through. So we've seen some of the changes as well with the US dollar. I think the story is going to be a bit of an evolving one, certainly in terms of how trade negotiations are going to be. We're not expecting perhaps a deal at S&P Global Market Intelligence very quickly, but I think that's going to be the direction we have to towards.
Yeah, let's talk about that positivity that seems to be reflected in the currency moves. So Asian currencies have been on the bounce on the hopes that we might see a deal happening. For example, we've got the Taiwanese dollar jumping as much as 5%, and that's the biggest intraday gain in over 3 decades. The Singapore dollar is near its strongest levels in 9 months at about 1.29 to the US dollar. So there is quite a bit of optimism being priced in right now. What do you make of the likelihood we might see a deal with what's being priced in to the markets?
Yeah, thank you, Ryan, for asking this. I think that's a big question, and I would say that, while there had been some speculations as the reason for strengthening of the Asian dollar, I would say that it also wouldn't have actually moved continuously as well without some of the anticipation that perhaps a trade deal may be coming through. But with that being said, certainly reiterating the point, S&P Global Market Intelligence, we see, especially given past iterations, that the main things particularly will be the US and mainland China's trade deal. That, I think, is going to be something that takes a few months in the making at least. And even if we do actually establish something, I think the general consensus, perhaps not just from us, is that it will not actually return us to the pre-April 2nd situation at least. So from that perspective, I think it might be a bit more volatile still moving forward, especially as to what may actually eventually be the case. So it's something that we have to unfortunately watch and see, and that uncertainty is going to keep us, keep the currency market at least moving.
Yeah.
Right?
Also, the speculation that these Asian currencies may be strengthening their currencies to win U.S. trade concessions. So that story is still to unfold, and we'll be tracking the latest. Helping us out this morning is Pan Jingyi. She's the Economics Associate Director for S&P Global Market Intelligence PMI team. Jingyi, thanks for your time this morning. Have a great week ahead.
Yeah, thank you.
All right, catch up again soon. Stay on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.